Hello and welcome back. New day, new episode, new story. Let's talk about the Evergrande crisis in China. The Evergrande Group is a Fortune 500 real estate developer. As recently as 2020, it had sales of more than $100 billion and adjusted core profits of about $5 billion. At its core, it's a home builder business. Its website states that it has over 1,300 projects across 280 plus cities, but it has pushed the boundaries, making investments in electric vehicles, an internet and media production company, a theme park, a soccer club, and a mineral water company. As a developer, Evergrande had to contend with a highly cash consumptive growth profile. Building a new project may take many months and require a lot of cash outflows across the way. Cash collections from buyers come later, with the exception of small upfront deposits. So how did Evergrande fund its impressive growth? Debt. It borrowed aggressively, even by real estate property development standards. It became the world's most heavily indebted developer, with a debt load of over $100 billion and over $300 billion in liabilities. One common practice in these construction companies, a game Evergrande excelled at, was to bid land at prices significantly higher than the market price. It didn't matter to them because the risk got transferred to flat buyers and banks that financed the purchase. That model worked well for local governments, banks, and households because house prices were going up. So much so that over the last 15 years, a serious affordability crisis emerged in major cities. The debt-fueled growth propelled Evergrande and its now billionaire founder into an elite class. It entered the Fortune 500 at the number 496 in 2016 and reached the rank of 122 by the latest ranking. But debt is a double-edged sword, and Evergrande was due to catch the other edge. As its debt burden grew, so did the interest payments on that debt. This is mostly fine, so long as revenues and profits with which you can make these payments continue to grow. But if the growth of profitability slows or government restricts borrowing, it's not fine. Moreover, the knowledge of your precarious position increases risk and makes that borrowing more challenging and costly. In Evergrande's case, the snake tightened its grip in 2020. It had its first major liquidity scare, a potential inability to meet its liabilities, sending a letter to the local government warning upcoming payments could cause a crisis with systematic financial sector risks. As with most deleveraging spirals, there is a technical side, the inability to make payments. But there's also a psychological side, the knowledge of instability impacting your market standing. The psychological one is more dampening. Reports of the letter sent Evergrande's stock and bonds tumbling. The short-term crisis was avoided. An investor group didn't force a big repayment, but the long-term remained. Don Bush's law states that crisis takes longer to happen than you expect, but then happens faster than you could have ever imagined. This proved true for Evergrande. To meet its ever-growing obligations, Evergrande began tapping into creative financing strategies. It pushed employees to provide short-term loans to the company, which it called high-interest investments, in order to ensure they received their year-end bonuses. But the company quickly fell behind, missing payments earlier this month and leaving thousands of employees in a lurch. To reiterate, the psychological side is just as impactful as the technical side. It was recently reported that Evergrande was offering to sell properties at a deep discount, indicating a fire sale required to make its payment and sending further panic spiraling into the market. Protests have broken out at Evergrande offices in China, with up to 1 million home buyers left in a devastating limbo, having paid deposits upfront for homes that may never be built. The media narrative further fueled the fire. Importantly, the Evergrande situation possesses a systematic risk to the Chinese economy. With deep ties to financial institutions and working-class consumers across China, a disorderly collapse would have far-reaching impacts, both financially and emotionally. But China is caught in a very tight spot. Act quickly with a bailout and be viewed as condoning the financial excess that led to the problem. Fail to act and allow the collapse to ripple through the entire economy that is just recovering from COVID-19 shocks of 2020 and 21. I hope the video makes you feel more informed about what's happening with Evergrande. If you like the video, please press the like button and consider subscribing. I see you very soon.